Hey everyone, I'm Brandon Vinyard. I've been selling bank-owned properties since 2002, and today we're going to discuss the number one reason why REO offers can take a long time to get a response: mortgage insurance. It's the one thing most people don't think about or even know what's going on behind the scenes. Today's video, I'm going to break out exactly what happens and how mortgage insurance can really affect the REO offer process. Stay tuned. This is probably something that very few people really understand that's going on behind the scenes, but this is by far, in my opinion, the number one reason why REO offers can take an extended period of time to get a response. And I'm talking about 5 days, 7 days, or longer. And hopefully you'll get you'll understand why after this video. But mortgage insurance is also known as PMI, or private mortgage insurance. And all it is insurance that is required when your LTV, your loan to value ratio, is above 80%, or in other words, you have less than 20% down on your loan, and it protects the lender from default and is basically paid by you, the borrower, and your mortgage. It just makes your mortgage, higher. The PMI is an insurance policy, and it protects lenders by compensating them for losses due to the default of a mortgage loan. And basically, it's insurance you pay to protect your lender in case you lose the home through foreclosure. So it's something you pay when you have less skin in the game that benefits the lender in case you default. It's typically required with most conventional non-government backed mortgages and when the down payment or equity position is less than 20% of the property value. So if you're purchasing or refinancing a home with a conventional mortgage, if the LTV is greater than 80%, then it's almost guaranteed that you're going to have PMI. Okay, so let's talk a little bit more behind the scenes of kind of what goes on. And the two biggest mortgage insurance companies in the country are MGIC and United Guarantee. Both have been around as long as I've been in the business. And some of the companies that will not have PMI on their loans are anything that's a GSE or a government-sponsored enterprise, like Fannie Mae and Freddie Mac. They're the only ones. And just about any other servicer out there, like all these guys, could have PMI on the loan, especially if it's conventional loan, like I said, with less than 20% down. There's a really, really good chance, almost guarantee, that you're going to have PMI. All right, so how does this really affect the offer response time? So if the foreclosed loan has mortgage insurance, then the management company servicer, which is the asset management company, will have to reach out to the mortgage insurance company to get their approval on the offer. Basically, they have first right of refusal when there's mortgage insurance involved. So these offers can take an extended period of time to get a response, sometimes days to over a week. I know it's frustrating, and especially there's no way to know ahead of time, oh, by the way, there's mortgage insurance on this. I can't tell potential buyers or agents unless I've already seen it happen before and know that's what's going to happen. But, we never know. This is another reason why all the counteroffers and accepted offer REO addendums are going to have somewhere on there subject to MI approval or subject to senior management approval. Basically, this is always their scapegoat, that they have this, subject to approval contingency. All right. Well, basically, mortgage insurance companies have only two options. They can pay the insurance claim to the lender and okay the current offer, or they can take the property back and sell it as an REO. So where they take the property back in-house and give it to their REO department and they liquidate it directly. So when the servicer files a claim or presents the offer for review, the first thing these companies are going to do is order a property valuation, which is basically an interior BPO, or broker price opinion, done by a local agent. They generally do not get appraisals that I know of. Generally, they go strictly by their BPO agents. But this is why, exactly the reason why, that these offers can take much longer times. Because minimum of 48 hours return time, but anywhere from 48 to 72 hours just to get the BPO back And that's if it's correct with no corrections. Most of the times they find something they want changed, or, something's not good enough, so they want something done different. So you're looking at 5 days to a week just to get the valuation back. And they're not going to make a decision instantly, so it's going to take another day or two. So you can see how it could take, at least a week to get some responses back on these offers. This is just a good example. This is directly from a REO seller addendum, and it's where they're basically giving you the warning that some REO properties may have pending mortgage insurance MI claims, and the carrier has the right to either approve a purchase offer or may opt to take title to an REO property in lieu of settling the claim if the offer you have presented pertains to a property within a pending MI claim. Basically just says that they could have insurance claims and they could actually lose the property back to the mortgage insurance company if they decided to take title to the property again. But like I said, it does not happen often at all. It's something I would never be worried about. You probably have a better chance of hitting the lottery, especially in my area of Florida, because our property values are so over leveraged that there's no benefit from taking it back. And this is the second part of it. The purchase agreement addendum required to be attached to and made part of the agreement will note that the sale is subject to the MI carrier's approval, and the MI carrier has the option to take title to the property in lieu of settlement of their claim. This is why I know a lot of people don't really read the seller addendums that much. Honestly, I don't even know if it's a moot point almost, because as long as you do what you say you're going to do as a buyer and go through on your end, there's really nothing. I mean, if they take a property away for some fluke thing like this, well, like I said, it doesn't happen very often. Rare, very rare in my area. Okay, this is also something I thought was kind of just strange, or I don't know, but this is actually from an order form. And it just says that the company is proceeding in this manner under a full and complete reservation of rights, and neither this letter nor any action taken by the company which may appear inconsistent with this correspondence should be construed as a waiver by the company of any rights or defenses which it may have, including but not limited to exclusion or denial in whole or in part of a claim or rescission of coverage. I don't know. I don't get that one. But anyway, that's just more good examples of behind the scenes stuff that no one else is ever going to show you or teach you. But just remember, if you're an agent and you want to try to explain, one of the easiest way to explain it to your buyers is there's a good chance the loan has mortgage insurance and they're having to get approval. And here's what has to happen. And that takes a while. Maybe by then your listing agent for the bank will know, because generally when an offer goes in for the first time is when we'll get a response saying, hey, we have to send this off for approval from the MI company. That's when the agent will know. Anyway, hope this video was helpful. You learned something. If you have any questions, please hit me up. I'll be glad to answer them. Please subscribe to the channel and like the video.